Let's talk fixed income, money market securities in Nigeria. Love this topic. We've got one more day for the investment window for the April 2024 federal government savings bond. So if you're listening, if you're watching, you have one more day to contact your broker. The window closes tomorrow to take advantage of a 2-year bond at 17%, and a 3-year at 18%. And you can see the coupon payments. You get your coupons July the 9th, October, January, and April. Let's also look at the last Treasury bill auction that took place on March the 27th. 2.4 trillion naira subscription for the 364-day paper. That is a lot. Although not much change in the stop rates between the prior and the current stop rates. Also, the latest OMO auction, that's open market operations, that took place just yesterday, April the 3rd, 1.1 trillion naira chasing after the 363-day paper. Again, stop rates pretty similar to what we're seeing with Treasury bills. Now, how much is Nigeria paying in interest for these money market securities? According to calculations done by Nairametrics, we're looking at about 1 trillion naira for the first quarter of this year. And of course, we already discussed this, but I want to ask everybody about this. The US dollar securities that are being offered to Nigerians. Well, it hasn't happened yet, but the likelihood of it happening. Ajibola Tobi-Osho, FCCA, she of course is a financial market specialist, joining us to discuss. Ajibola, good morning to you. Thank you so much for joining us.
Good morning.
So, I'm going to get everybody's feel of this. This domestic issuance, if it happens, of US dollar bonds, well, what do you think? What do you make of that offer?
I think it's a good thing, right? The federal government is trying as much as possible to raise funds from every area they see fit, right? Yeah. In as much as we say, I listened to the last speaker saying that most of those funds are already with the CBN as swap. Well, if that's between the bank and CBN.
That's their headache.
That's their headache.
Now
your money is in the bank.
Exactly.
So right now it's between the federal government and the people. Yeah. So if you have it in your account, why not place money in it, right? Yeah. So it's just a quicker way, a faster way to, get the local market involved in this kind of security. And trust me, the federal government can choose any means to raise funds, right? Yeah. Any means, because they are more known as risk-free, and to the next extent, they would pay you back your money. Because I heard him too say something around people receiving money in naira at maturity. I doubt that. The financial
he was saying they should be receiving it in dollars.
Oh yes, they will. They can. That's what I'm saying. Like the financial market is based on trust. Right. There's certain things that cannot negate that fundamental, the trust. Yeah. If I give you money in dollars, you can't pay me back in naira.
Exactly.
Do you understand? So you pay me back my money in dollars.
What do you make of let's put that figure again, the 1 trillion, according to Nairalytics, which is the research arm of Nairametrics, in interest? Is this, the currency looks to have been stabilizing a bit. Is this the trade-off you get for offering
it's
securities?
a trade-off, right? The past government have been more concerned about on cost, and putting the economy at risk. Right, but in a case where we have rising inflation, you have pricing stability, and all, one thing has to give way for the other. So I do not think. Like you said, it's the trade-off that has to happen. You have to pay something for something. If you look at it now, where's dollar naira? It's about 1,265, which is coming down from about 1.8, the all high that I got to. That's significant, right? And that should dovetail into inflation prices. I don't expect inflation to continue to gap high as much as it is. It will slow down. The rate at which it goes up, we should slow down most likely for the next coming month. So that's very significant, and that has been the target of the CBN governor. He has said it clearly. His mandate is to ensure that it brings down inflation rate and to cause price stability. So all these are the things they need to put in place to achieve that.
Okay, great. Thank you for the breakdown. Help us with the OMO auctions. Looking at the one that took place yesterday, who has access to this, and what's the threshold? Because it's pretty high, right?
Well, that's between the federal government, between the central banks and FPIs, foreign investors. It's actually not available. It means open market operation, right? So it's only the monetary policy that has right to issue that. So they issue that to banks and FPIs.
Okay.
That's
and
really what
as far as the auction results, looking at what we're seeing on the screen now, it looks like they're pretty comparable with what we saw with Treasury bills.
So you can kind of just mirror it in our mind that with the federal government and monetary policy, they've kind of capped rates in a particular place in their mind, 21%, and they might most likely not do anything higher than that. Because if you check the last auction too, there was a first issue, and there was a first result that was released at 21.50, and then they retrieved that, and they released a new one at 21.12. So it kind of just shows that, we've reached our max. 21% is what we intend to offer, in my opinion, is a fantastic level. Fantastic, 27% effective yield. That's fantastic enough. So, and all the FPIs have seen that as fantastic too, and we've been seeing lots of inflows from them coming to the country. So if they're asking for 21%, I don't think, why do I want to offer more and bear more costs if I'm already doing what they need to do?
Okay, makes sense. So in line with that then, the T-bill auction that took place on the 27th, I mean, okay, fine. The rates, 21%, effectively, I said 26, 27. But the subscription, though, it's gargantuan. I mean, 2.4.
That should show you that we are getting inflows, right? They are coming in. I mean, like I said, picking up effectively about 27%, and the fact that our currency has started appreciating lately, it's a good sign, right? It's a good thing. It's more favorable for them to invest. And mind you, FPIs are all interested in the return, the sharp returns they're about to make. By the time they do their workings and they say that it's positive for them, they don't care about any other thing you're talking about. They come in and they invest. So we've been seeing a lot of inflows lately.
Does anyone bother with 91 or 182? It looks like it's 3. What would, if someone comes to you and says, Ajibola, what should I be putting money in? Because I think it's 100,000 minimum for these, right? For T-bills, is it not? If on the secondary side, on the secondary. If you want to go
100 million actually. On the secondary.
Okay, but then the banks will offer it in...
they can enter it in bits and pieces. So they'll offer you retail sizes. They call it retail sizes.
Right.
So it depends on banks. Some banks will tell you 500,000 is the lowest. Some banks will tell you 100. So it depends on the bank you go to.
So is there any point in going for a 91 or 182?
It mainly depends on your investment horizon, right? It just depends on that. However, you see some cases where people will buy the 1 year regardless they know that, okay, all I need it for is just 6 months, but in 6 months I can sell it back.
Right.
Do you understand? You can go through that option. The only thing that you post to is that, what if yield has moved against you and then you're selling it back at a loss?
Right.
You most likely would not, because it would have, your 1 year is what would turn to 182 days. But should in case it does, I mean, people just check their portfolio, they check their investment horizon, and they keep it at it. If I have if I have something I want to use money for in the next 3 months, in the next 6 months, I'll be looking at 91 days and 182 days. You get it. So, it's just mostly is around your investment horizon. That's that's what drives it.
Okay, so I mean, you've already looked at, you may have already answered this question. So you see rates maintained at this level?
I think so. I mean, if there's going to be any reason to increase rates, it will have to be something fundamental has changed in all these economic indicators. I mean, maybe, I don't know. I don't see inflation. Like I said, I don't even see inflation going as high, continue as on a high terrain. So with all these things happening, I would expect that it should just maintain it at around 21%.
Okay, we're looking at the savings bond, and I have to say this. I mean, I remember there was a time when the 2-year was doing, wasn't it 11, 12, all right? 3-year, around that. Now you're looking at almost 18%. What do you make of, I guess, the offers here for the savings?
If you're going to increase interest rates, if MPR rate is now at 24.75%, it's only reasonable that all other rates kind of, if not mirror it directly, but I mean, continue to rise close to it, right? I mean, savings bond has always been priced lower than every other bonds in the market. So we expected them to have the increased rates on it. So it is coming. It's coming at the right level. All
right. So put on your financial advisory hats on, right? Why should anyone watching diversify their portfolio into these securities? I mean, don't throw in stocks as well. You can.
I mean, the most purpose of diversification is to hedge your risk, right? Holding a portfolio, most times you want to ensure. I mean, there are beliefs that there are some securities that have they don't have direct correlation with each other. So that means that if I'm investing in real estate versus in treasury bills, or I'm investing in global market equities versus this, it allows me take advantage of different markets, and when one market is crashing, there's a chance that the other market will be doing well. There's a direct. I mean, look at the local market here. We expect that the fixed income market and equity market are not directly related. So when the equities market is going down, we see fixed income market go up. So you see people just try to do that. It's just to hedge your risk and to ensure that you take advantage of the good yield at every different portfolio that you have. So it's largely important that you diversify your portfolio.
Okay.
I mean, to hedge risk most importantly.
Now, I understand you already said that you don't think rates can climb, but I expect them. Thank you. So, but what if at the next meeting, MPHC is May, I think, or so. if we get in the inflation prints of
for March, for February,
exactly, and they keep hiking, then
I mean that would then mean they would then have to sit back and look at all those things and then consider how much high they want to increase it. But like I said, based on the data that we are seeing, if FX, for instance, has dropped from 1,008 to 1,002, that it should be priced into food prices, right? And that should be priced into petroleum and the rest. So I'm not saying like I don't expect that inflation will start gapping down, but I'm saying the rate at which it's going up would slow down. And if that happens, that has been the strategy. I mean, that's been the mantra for the Apex Bank CBN governor. So why do I then need to now continue hurting myself? Because remember that the more they hike MPR rates, the more it would affect the real sector that needs to borrow from the banks.
Loans,
I mean, they're having to reprice loan upward now, and all these things will affect how your productivity and all. You can even make an economic crumble or be at standstill. So they look at all these things too before they just throw out policies and then ride out on it. So I mean, they will continue to look at these things and ensure that they stay at it, to ensure that whatever they need to do, it has to translate. What they've done so far has translated into the market. Interest rate is now high. A lot of people are saying Nigeria is more investable now rather than it was before. So, I mean, it's a good sign. So we are at a good place right now, in my own opinion.
Hey, we'll leave it on that positive note and encourage people to diversify their portfolios. Ajibola Tobi-Osho, always a pleasure talking money markets, fixed income with you. Thank you so much for joining us.